Snipers, you have to see what's happening to Bitcoin price this Thursday, as Bitcoin has been maintaining price action above the 200-day moving average, despite the S&P 500 already rejecting its 200-day moving average, meaning that we're still expecting Bitcoin to come back down and test its 200-day moving average, showing confluence right around the $20,000 big even. But more importantly, let's talk about some other important things happening on the charts. And one of those things are liquidations. We're actually starting to see some long liquidations, not just short liquidations, with this small move to the downside. $20 million in Bitcoin long liquidations, the highest amount since the November 8th crash in 2022. But what's more interesting is the short squeeze that we're seeing right now. Notice how we had this massive spike in short liquidations here with this initial move above 17,200. And what's very interesting about this move that we saw with Bitcoin is we saw a similar amount of shorts liquidated back in August of 2021. And that actually was just the start to Bitcoin seeing further upside. And so I dug a little bit deeper for you snipers and check out what I found, this potential roadmap of where we could be headed here for Bitcoin. You can see here we had the FTX crash, people lost interest, and everyone expected Bitcoin to come lower, to come down and potentially test the $10,000 level, maybe the $9,000 level, but that didn't happen, right? We actually saw Bitcoin move up. And so this is telling us that what if Bitcoin actually has even further room to the upside left, and a even stronger short squeeze is in the works for Bitcoin to potentially maybe even get towards 30,000 US dollars. What you're looking at right now, obviously, was back in 2019, but what if we're seeing the same patterns repeat itself? And of course, historical patterns tend to repeat themselves. Check out this very interesting chart that I found here, guys. This is the equally weighted S&P 500 index. So this isn't the actual S&P 500 E-mini futures contract that we typically look at. This is an equally weighted portfolio of the S&P 500. And we actually have a golden cross forming here, where the 50-day moving average, a short-term moving average, is now crossing above a long-term moving average, in this case being the 200-day moving average. And in the past, that has signaled further upside for the equity markets. And so could we expect the equity markets to continue further up, maybe even break this bear market resistance level? And maybe this rejection of the 200-day moving average is just one ABC correction before another impulse move to the upside. All of these things are on the table, snipers. What's interesting about the SPY right now is because it's below the 200-day moving average and Bitcoin is still above its 200-day moving average, Bitcoin's performance against the S&P 500 is actually shooting to the upside right now. This is very interesting because this is something that we've monitored here on the Snipers channel for quite some time. One of the four-dimensional revolving parts being Bitcoin against the SPY. And what you'll see here right now is that Bitcoin against the SPY likes to stay above the 200-week moving average. You can see even in the March of 2020 capitulation, we saw Bitcoin's valuation against the SPY hold above that 200-week moving average. And now we're starting to inch back towards that 200-week moving average. And so it looks like Bitcoin still potentially has some room to go when it comes to showing strength against the S&P 500. And if Bitcoin isn't coming below its 200-day moving average and the S&P 500 stays below its 200-day moving average, that gives Bitcoin the green light to see an abnormal amount of activity and price action potentially towards the upside, regardless of what the equity markets do. And so we've seen this happen time in and time again in the past, where Bitcoin has outperformed the S&P 500. So what if we're in one of those phases right now where Bitcoin was potentially disproportionately valued against the S&P 500 due to all of the bad news, FTX and so forth, Luna, Three Arrows Capital, all of these liquidations, but now that those are behind us, what if Bitcoin is potentially re-establishing its price level and its ratio of price against the S&P 500 right now, which means it could potentially be outperforming the S&P 500. And so this is something very important right now, the Bitcoin against SPY chart holding itself up right now. And that's clearly being shown right now with Bitcoin holding above the 200-day moving average despite the S&P 500 breaking below its 200-day moving average. So I think coming into this weekend, we really want to monitor Bitcoin at this 200-day moving average. Another potential scenario that we could expect here in the short term for Bitcoin would look a little bit like this, right? Maybe we consolidate a little bit here. We test this previous resistance as support, that 200-day moving average, before we see that final impulse move to that $24,300 level, which is still our price target here on the Snipers channel. Could this be the potential price action that we're going to see here over the next few days into the next few weeks? I think this is the most probable scenario because this would also fill the CME gap that has been left at 19,995, which is yet to be filled. And it's going to require Bitcoin to break below 20,000 US dollars in order for that CME gap to be filled. So we have a golden cross for the equity markets. We have a lot of short liquidations. In the past, it's only been the start to further upside. You can see in August of 2021, we had a lot more further upside after those short liquidations. We're even seeing long liquidations, nothing as strong as what we're seeing with the short liquidations. But check this out, snipers. Bear market accumulation phase and then bull market, right? Has the bear market ended? I know a lot of people are trying to factor in the amount of time that we've seen Bitcoin inside of this downtrend, because a lot of times bear markets only last a certain period of time before we enter an accumulation phase. And so what if we are entering into that accumulation phase? I think that's highly probable, but we cannot confirm that until we have Bitcoin dominance give us that confirmation, which we talked a little bit about this yesterday. But I think that in order for us to really feel like Bitcoin has bottomed out like we've seen in 2018, we need Bitcoin dominance to get back towards its 200-week moving average, which it's slowly doing so. Every single day we are forming new yearly highs, forming new local highs. And so we're actually getting towards that 200-week moving average little by little. Once we see Bitcoin dominance around 57%, we could really make the strong case that the bottom is behind us, because in 2018, it wasn't until Bitcoin reached that 200-week moving average when it comes to dominance that the bottom was already in. And so I think that that is also something very interesting, because that potential price action that we've been looking at here is a potential roadmap for Bitcoin in the immediate short term, where potentially we continue further up after this short squeeze actually validates this as well, where we enter this accumulation phase, maybe the bottom is already in, and then we enter into that bull market. So very interesting stuff, snipers. I'd love to hear your thoughts in the comments below. Notice how we are also fighting the long-term holder cost basis right now for Bitcoin. And so that's what's acting as immediate resistance. Where Bitcoin currently sits around 21,300 is where we have that long-term holder cost basis. And so that is just acting as minor support. But in the past, when we've broken above the long-term holder cost basis, we've seen some strong momentum. So this also justifies Bitcoin is in the same phase that we were looking at here, where we're entering accumulation, where we could see further upside. All of these charts coming from different places, by the way, justify the fact that Bitcoin can potentially see some further upside here and potentially towards that $30,000 level. Now, yes, the economy is still not as resilient as it was prior to 2020, right? Check this out. I saw this on Twitter. Luxury car market is taking a beating. Here's an example. 2023 Audi S8, 6 months ago, $5,000 to $10,000 over MSRP, and now it's selling at $10,000 below MSRP. Now, some of you might say, well, that's proof right there that we're only entering into a worse time, into a recession. But remember this, snipers, markets are forward-looking. So even in the pandemic, remember in March of 2020, when markets bottomed around the midpoint of March of 2020, we still saw layoffs and companies struggling into June, July, August, September, October, even in November and December of 2020. But by that time, markets had already bottomed. They'd already priced that in, and they were actually starting the recovery. By January of 2021, when everyone realized what happened, we saw that major exuberance to the upside, where we saw a little bit too much upside, and Bitcoin shot up, broke its new previous all-time high, formed new all-time highs, all within the span of a couple months, right? And so markets are forward-looking. We cannot just say because things are starting to be realized out there in the normal world, like car prices, for example, that things could not get worse, but markets haven't yet bottomed. Does that make sense? So markets could have already bottomed, and now we're just realizing all of the effects of this recession. You know, we have massive amounts of layoffs that have already been put into place. Notice how just ending 2022, we saw a massive amount of layoffs, 59,000 tech layoffs just in the end of 2022. And so is this a bad thing when we're looking towards 2023? Check this out, snipers. These are some very interesting visuals that I found about our top risks of 2023, right? People are saying, well, there's going to be another black swan event, and so we're expecting a capitulation. So check this out. Here are the potential top global risks in 2023. And this is based on artificial intelligence analysis of what we could potentially expect from the least amount of impact to the most amount of impact. The most and biggest risk that it shows here is cost of living crisis, energy supply crisis, and rising inflation. Funny thing is, inflation, based on what Cathie Woods is saying, is already out of the way. We're actually seeing deflation. And so I would say that inflation isn't necessarily the biggest concern of mine. You can clearly see that with the used car prices, right? And so another interesting graphic that I found is the biggest winners and losers of 2022 when it comes to the equity markets. Why is this important? Well, a lot of times, like what we saw with Cathie Woods' ARK Invest Fund, right? In 2020, it outperformed every equity. And then coming into 2022, it was one of the worst performing indexes, right? And so when something's the top performing, usually the next year, the next 2 years, it's not going to be that top performing asset anymore. It's going to be maybe one of the worst performing assets. And so, I think it's good to look at this with a lens of, okay, we had Coinbase as a major loser, Meta, Digital Realty, Blackstone Asset Management. And then the ones that won were ExxonMobil, right? Energy, insurance. You can see the healthcare industry did very well. Energy did very well. Real estate did horribly. Technology, of course, did very bad. Asset management did very bad. And so this is important because if, let's say Coinbase, for example, was one of the biggest losers of 2022, then does that mean it's also going to be the biggest loser of 2023? Probably not, right? Because if 2022 is so bad, 2023 shouldn't be as bad. And what's very interesting about that is if we actually do follow this prospective roadmap for Bitcoin, where we see a short squeeze, maybe Bitcoin does come to 34,000, then looking back, maybe by the end of 2023, we're going to look at the cryptocurrency market and be like, man, this was actually a pretty positive year. Maybe it ends on a green note, and Bitcoin doesn't have to form new all-time highs for that to happen. We just have to see a strong recovery towards that $34,000 to $35,000 level for us to look back at 2023 and say, man, that was such a good year, right? So here are some interesting 2023 predictions that I saw. Interest rates will peak in 2023. Work culture will continue to bend towards flexibility. Says here on this one, the crypto winter will continue. Maybe people, because I remember back in 2018, will consider this a crypto winter, even though you could see upside for the rest of this year. Because we don't form new all-time highs, people will still refer to this time period as a crypto winter. So I think that's also an interesting aspect of this perspective roadmap for Bitcoin. And what if maybe in 2024 is when we see that final capitulation event? Because that's kind of what happened here, right? Once we see the exuberance, the short squeeze, we see a slow bleed. I've been talking about the snipers. Like, what if Bitcoin is able to get back towards some of these higher price levels, maybe around that $34,000, $35,000 level, $38,000 level, and then we slowly bleed out, extending the bear market, and then maybe one last capitulation for those that expect the lowest CME gap down below 10,000 to get filled. Maybe that's prospectively on the table before we can actually expect a bull market 2025, 2026, for example. So I think that these are all very important things to just keep in mind. But I really like this perspective roadmap here for Bitcoin. It says energy will remain expensive. So I'd love to hear your thoughts in the comments below, snipers. And by the way, I heard that YouTube is not notifying you guys of our new videos. So make sure to turn on the post notifications, click the bell icon down below, turn on those notifications, comment below if you guys like this video. And I appreciate each and every one of you tuned into the Snipers channel. It's gonna be a very interesting time here coming into Friday. We're gonna wrap up this week. Bitcoin yet to get below its 200-day moving average, outperforming the equity markets right now, with the S&P 500 below the 200-day moving average, rejecting an extremely important level, which is the bear market resistance level. What we really have to monitor for Bitcoin right now is 19,800. We can come down to 19,800 and things are still very fine and normal, because that would fill the CME gap and we can see a continuation move to the upside. So that's what I'm currently monitoring. Now, if we break below 19,800, the only next level of support is that 50-day moving average, currently right around 17,600. By the time we test it, it could be around 18,000. So that would be the make it or break it, because below that is 17,200. And that's the floor for Bitcoin right now. If we break below that floor, we end up going underground. And that's where we'll open up further downside targets, new yearly lows, new lows, if we break 17,200. And so that's the make it or break it there. But 200-day moving average, 50 days still holding as support right now. Let's see what happens. I still expect 24,300 to come on the table at some point or another, snipers. And with that being said, I hope you enjoyed this Thursday update. I believe that's all I had to say. I will quickly run through some charts here just to wrap up this video. The DXY is acting sort of weird because we did have this daily candle which closed bullish, but then because we broke the candle low with another daily candle 2 days after that, it invalidates this bullish candle. And I'll show you a perfect example of that. Like even right here, when we first tested this 200-day moving average for the DXY, we had this bullish candle come and test the 200-day. It looked bullish, but then by that second candle, you can see we had a rejection. And then by that third candle, we broke that low, and that actually turned out to be bearish. So this was invalidated, this bullish candle symmetry. And so I feel like this one is invalidated right now. We have to really monitor the DXY. It's trying to break back above this support level because it actually broke the support, which is now resisted. So we have to monitor that. And then that's obviously causing the S&P 500 to have a little bit of a shakeup here. But just keep in mind that we are holding that 50-day moving average right now. The daily candle is still attached to it. And so I think that coming into Friday, what we'd like to see here for the S&P 500 is to hold at that 50-day moving average. The total market cap, because altcoins are selling off against Bitcoin, Bitcoin dominance is moving up, has already tested its 200-day moving average. So it's actually holding it so far. We'll continue to monitor that. But clearly, the equity markets are showing weakness right now against Bitcoin. Ethereum 1440 is very significant, just as important as 19,800 is for Bitcoin. So we'll continue to monitor that. Ethereum to Bitcoin chart still not telling us anything just yet, but we are sitting at that 50-day moving average. So let's see if we break below that 200-day moving average, because so far it looks like we've held it as support in the past. And so that's what we're monitoring. But we know Bitcoin dominance is poised to go up. The VIX starting to spike slightly, not too bad. But I would say it was pretty red across the board when it comes to equities today. We saw a lot of red. And then if we were to look at an altcoin portfolio, we actually have a lot of green right now. And so obviously the altcoins are holding up. But when Bitcoin sees those downside moves, we are seeing Bitcoin dominance sell off or to move up, meaning that altcoins are actually selling off when Bitcoin sells off. So that's something that we've been monitoring. So anyways, thank you guys for tuning into the Snipers channel for this Thursday update. And until next time, I'll see you guys later. Snipers out.